Gonna do two new things today. I'm gonna give you a pump and a dump. In my opinion, I'm gonna share one stock that I think could be pumped and probably return you 50% in the next, I don't know, 30 trading days. And then I'm gonna give you a dump, a stock that you just look at and you're like, oh, if the market throws up on itself, this stock is going to dump further. Oh my God, if the market recovers and is strong, this stock could still dump further. So I've got two stocks for you. So let me pull up the first one, and these stocks are going to be the show or the stars of my show. So let me pull them up. Boom, there's the first chart. All right, this will be the pump stock. I haven't told you the symbol yet. First, I'm going to tell you what I see. So let's go back to a full year. A full year, you can see this stock was over $10. Geez, it looks like a SPAC to me, Matt. Yes, it was a SPAC that had demand, outflow. Let's go to a 3-month chart so you can see better. Hey, that 3 months still looks like a year chart. Let's go to a 1-month chart. Okay, they're gathering it here. They're buying it here at 1016. Yes, and then that February dump came. Oh, 4 straight outflow days, right? And the stock is what? $5. Guess what? The stock's under $4 here. And have you seen they started acquiring the stock? And a few days ago, on March 4th, the stock traded 1 million in volume. Dude, Matt, 1 million doesn't seem like much, but the stock is SIDU. It's right there on the screen. Now I'm going to scroll up, okay? The volume is generally 81,000 on the day. If you had 100,000, that's a lot of volume. A million is a heck of a lot of volume. 10 times for this stock, aerospace company, okay? Market cap, here's what we're looking at, 73 million. So let me just see, market cap 73 million. Let me just see, free float, shares outstanding, 16.2 million, which is why stocks like this get pumped. Understand, if there's only 16.2 million and people own the company already, people are like, hey, man, I've got a few thousand shares. He's got a few. 16.2 million shares, not a lot of shares. Stock is 451. It was trading double in value. What? Less than a few months ago, 3 months ago, 1 month ago. 1 month ago, the stock was at over $10. So the stock is taking a dive. Now let's go to the 1-month chart, okay? Because what I'm showing you is inflow here. And let me break it down for you a little more. Again, this is a stock that probably will pump, and I might even buy some of this. Okay, so now I'm going, here we go, 3-4, the day with tons of volume, huge outflow as it's spiking. And guess what? Huge inflow after it. So there are people that have bought this company in the $5.60 range, and we're sitting at $4.50. So I'm telling you, this stock could easily go up 30% within the next trading week, and I think it could go up over 50% in the next month. This would be an example of a pump. Now stick with me through this video, and I'm going to show you what a dump looks like. Abracadabra, boom, and there's Shopify with us. S-H-O-P, I've got the chart up there. Do you see the 3-month chart? So let me just central in on some things here with my cursor. In February, again, when the markets got hit for the first time, huge outflow. Then there's only been 2 inflow days, followed by heavy outflow day, followed by today, heavy outflow again. So let's go to the 1 month just so I can break it down, show you what a bad chart looks like. They started selling this when the stock was still 746. They continued selling it 660. This day, 663. But the stock is lower, so people were buying 63. Then outflow. So outflows minimize, and it's picking up 1, 2, 3. So it's telling me that it's going to have another tough day where they do 7 to 9 million in volume. And let's just go to the 5-day chart for Shop. Boom. Huge outflow, end of day, 512. Guess what's going to happen tomorrow? And if it doesn't happen tomorrow on Wednesday, it'll happen on Thursday. If it doesn't happen on Thursday, it's going to happen on Friday. But Shopify is going sub 500. Why? Because we look at Shopify's earnings. Let me see if I can pull that one up on my phone, just give you some information. Okay, Shopify's current PE, price per earnings, right, is 22.51. Google has a high one. Facebook has a high one. They're 19. Apple's is pretty high. Their forward PE, because they give forward guidance on what they're expecting in the next quarter or two. Their forward PE, ready for this? Drum roll, please. 138. 138. But normal companies' PEs should be like in the 20 to 30 range for a company like that. Maybe even 40 or 50 if we look at Amazon, right? Shopify, Amazon, Etsy. I wonder what Etsy's PE is. Hey, Matt, why don't we look it up? All right, so let's just do Etsy real quick. Etsy's PE, and again, they just came out with earnings, is 41 currently. Forward PE is 38. So I just mentioned Shopify's forward PE is 138. What does that mean? Well, that means Shopify's price would have to be sliced into a third. So if Shopify is trading at $515, a third of that would be $175. Are you telling me Shopify could go down that much? Probably not to 175, but yes, Shopify is probably going to go down. Why? Because we got CPI numbers coming out as you're watching this video and volumes increasing. So if they keep selling four-letter stock that don't have earnings like Shopify, it will go down. So now I showed you what a pump could potentially look like and what a dump of a stock is going to look like. Have a super trading day, more knowledge. Watch the next video.